Hello friends, I am Advocate Sandeep Navula. Today I will discuss about the concept of provisional attachment in the CGST Act 2017. The concept of provisional attachment is the part of Section 83 of CGST Act 2017, and it is very important topic nowadays because so many orders for the attachment of property of violators of the law are taking places, and people are anxious about what are the provisions that a practitioner must know about the process of provisional attachment that is set in by the department in case of violators non complying with the payment of tax, interest and penalty. My friends, the section 83 is very important, and it reads in the following words: as per subsection 1 of this section, where after the initiation of any proceeding under Chapter 12, 14, or Chapter 15 of CGST Act, the Commissioner is the opinion that for the purpose of protecting the interest of the government revenue, it is essential. So to do, he may, by order in writing, attach provisionally any property, including bank account belonging to the taxable person or any person specified in subsection 1A of section 122 in such manner as may be prescribed. When we read the subsection 1 of section 83, there are some conditions are required to be fulfilled when this process of provisional attachment of any property of the taxable person or any beneficiary under section 122 subsection 1A is commenced. What are these conditions to be satisfied? First, there must be initiation of proceedings under chapter 12, 14, or chapter 15 of the CGST Act. Chapter 12 of CGST Act deals with the assessment proceedings. Chapter 14 deals with the proceedings in relation to search, seizure and inspection, and chapter 15 of CGST Act deals with the with the concept of demand and recovery in the CGST Act. And the subsection 1 of section 83 says when proceedings have commenced in either of these three chapters, only then the provisional attachment under section 83 can be initiated by the commissioner when he is of the opinion that if this process is not set in, there can be loss to the revenue. The first, there must be some emergency to protect the revenue in the opinion of commissioner. Second, he will pass his order in writing for the provisional attachment of any property including bank account. Here the term property means any kind of property, whether movable or immovable, tangible or intangible. Then it also includes the bank account, and the order must be in writing, and the property which is to be attached here must belong to the taxable person. The person who is said to be taxable means a person who is registered in the GST Act, or the person who is not actually registered but he is liable to be registered. So sometimes you will find somebody who is liable to be registered as per the provisions of GST Act, but he has not taken the registration. His property can also be attached provisionally if you know having commenced the proceedings under chapter 12, 14 or chapter 15, and property of somebody who is the beneficiary of any you know any offense that has been committed under this act is also likely to face the provisional attachment of his property under section 122, particularly in subsection 1A of this section 122. These are the conditions to be fulfilled. Now, this subsection 2 of section 83 to reads as every such provisional attachment shall cease to take effect after the expiry of a period of 1 year from the date of the order made under subsection 1. It means the order that is passed under subsection 1 of section 83 for the provisional attachment of any property of taxable person or the beneficiary under section 122 1A will come to an end after the expiry of 1 year unless it is removed earlier to the expiry of 1 year by the commissioner on any ground or any representation made by the taxable person before him. It means the maximum life of the order that is passed for the provisional attachment under section 83 one is going to be 1 year. It may be shorter than 1 year in case the commissioner will remove it before the expiry of 1 year. Now the question arises, can it be having a life more than 1 year? This is disputed point, and I will discuss it later in this lecture. In this video I will tell you, because the law is not literal about this point, and there are some pronouncements by the court of law regarding this point, whether the provisional attachment can continue after the expiry of 1 year, or it may continue on maximum for a period of 1 year, is the is the point where disputes are not finally decided by any court of law, and we have different opinions of different high courts on this point. I will tell you some of the case laws later. Now, one has to know the process how this order will pass, and for this purpose we have to touch rule 159 of CGST Act. As per sub rule 1 of rule 159, the commissioner will pass the order by issuing it in the form GST DRC 22, and when he will pass his order by using this form, he will detail the property that he is going to attach. It means there must be proper description of the property that is going to be that is going to be attached provisionally by the department, and this form GST DRC 22 is issued in that case. And a copy of this form, which is GST DRC 22, is also sent to different departments, which keep record of the property of the taxable person or the beneficiary under section 122 subsection 1A. The departments which register the property of persons in India is is given the notice in DRC 22. A copy of this order is sent to them, so that the taxable person whose property is going to be attached may not take action to sell his property to other body. It means the a copy of the order is sent to different departments, so that encumbrance on that property can be can be invoked, can be imposed, and the uh, taxable person is barred from disposing of his property. And these departments may include the registrar of immovable property, uh, the transport registering authority where your vehicles are registered. Then bankers are also given a copy of this order, because the banker must have the knowledge that now this much amount which is specified in the DRC 22 is not to be allowed to be withdrawn by the taxable person or the beneficiary under section 122 subsection 1A. And unless this order is withdrawn by the commissioner, the authorities are prohibited from allowing any transaction in the properties that are detailed, described, or mentioned in the GST DRC 22. Now next is sub rule 3 of rule 159. It reads as, where the property attached is of perishable or hazardous nature, and if the person whose property has been attached pays an amount equivalent to the market price of such property, or the amount that is or may be payable by such person, whichever is lower, then such property shall be released forthwith by an order in Form GST DRC 23 on proof of payment. This is to be explained as where the property that is going to be attached or that has been attached is going to Paris or is hazardous, then the person to whom this property belongs is having a liberty to get it released from the department either by paying the market price of this perishable or hazardous property, or the tax, interest and penalty which is involved in non-compliance, or which department is demanding from the taxable person. Whichever is lower, then his property can be released by issuing Form GST DRC 23. Suppose the market price of the perishable or hazardous property is rupees 20,000, and the amount of tax, interest, penalty that is payable by the taxable person is rupees 18,000. Now you compare both the amounts, which is lower, 18,000 is the lower amount. If the taxable person pays this amount to the department, his property having this nature, perishable or hazardous, shall be released forthwith by issuing uh, Form GST DRC 23. And as soon as the taxable person places the proof of payment before the department, his property is bound to be released by the department. Clear? Next. Next is sub rule 4 of Rule 159. When such person fails to pay the amount referred to in sub rule 3 in respect of said property of perishable or hazardous nature, the commissioner may dispose of such property, and the amount realized thereby shall be adjusted against the tax, interest, penalty, fee, or any other amount payable by such person. So, in case you don't appear to pay the market price or the amount of tax, interest, and penalty involved, then the department has no other option except to sell it in the market, and whatever liability you have in terms of tax, interest and penalty, and any other sum in the law shall be adjusted out of the sale proceeds of this, you know, this transaction of selling the perishable or hazardous property of the taxable person. Now we have sub rule 5 of Rule 159. Sometimes the order passed is against me, and it indicates the provisional attachment of my property because I am the person, the subject matter of this order. But mistakenly, department can provisionally attach the property of any other person who is not having any involvement in my case. Then in that case, this person whose property has been attached provisionally on mistaken ground by the department, then he can file his objection against the passing of this order, and he may, by proving that he is not the person whose property is liable to be attached, can get his property released by the department, and this person who is filing objection against this provisional attachment that may have taken place on mistaken ground by department, by using Form GST DRC 22A. It means the objection by him can be filed by using Form GST DRC 22A to oppose the action taken by the department in terms of seizing his property provisionally. In fact, he is not liable under the law to become the part of this provisional attachment in terms of his properties. And if his objection is found to be right, or he has given satisfactory explanation then his property is bound to be released by the department by issuing GST DRC 23. Likewise, the commissioner may also release your property if you are the taxable person and your property has been attached provisionally, and you have proven that the action taken by the department is not is not correct as per the law, because in the beginning section 83 subsection 1 says that this action of provisional attachment can be taken only after the initiation of proceedings in chapter 12, 14 or chapter 15. And if department has not started any proceedings and has gone has gone very fast to attach property of any taxable person provisionally, then he may challenge this order of department, and by proving that the action taken by department is wrong, or he may also file the writ petition before the high court to prove the action department malified, then his property can be released. And when property will be released by department, it will be released by having the form GST DRC 23 issued by the department. It means you may challenge the action of department in several situations when you find the order department is not correct, is not as per law, it is not the bona fide order meeting the elements of section 83 subsection 1 and subsection 2. Now I am naming some of the case laws that you can refer while dealing with any situation when you face uh, you face such kind of uh, cases in which your client's property has been provisionally attached by the department. Sangre Styles Limited versus State of Gujarat. In this case, it was held that this section 83 would come into play only after the necessary action is taken under section 62 of the act. Second case is Wellness Industries versus Union of India. In this case, it was held that the power of provisional attachment under section 83 should not be used as a tool to harass the SSC. It means the power used by the department in section 83 is draconian power, and therefore it must be used with a lot of caution. A number of high courts have stated in their judgment that uh, before the department initiates the action for the provisional attachment of any property including bank account, it must ensure itself first that it is the emergency to protect the interest of the revenue of the government. If such kind of emergency is not there, then this action is not supposed to be bona fide action in the eye of law, and high courts, by high court can set aside the action taken by the department and can direct department uh, to restore the position of the taxable person. Then third is the HM Industrial Private Limited versus Commissioner CGST and Central Excise. In this case, it was held that the provisional attachment under section 83 does not apply to the directors of a company. So when the action is being taken against the property of the company, then directors' property cannot be attached provisionally. It is the company against which the action is being taken. Therefore, department cannot attach the property of directors. Clear? This is what is stated in this judgment of HM Industrial Private Limited versus Commissioner CGST and Central Excise. The next is Jayashree Banke Bihari Traders versus Union of India. In this case, it was held that the provisional attachment orders under Section 83 ceases to operate after 1 year. The question of validity of repeated attachment orders is open. It means as soon as 1 year will pass, there will be automatic cancellation of the order. It means the property cannot remain provisionally attached after the expiry of 1 year unless department refreshes its order to continue this provisional attachment. It means in the case of Amazonite Steel Private Limited versus Union of India, it was held that the provisional attachment under Section 83(2) shall cease upon expiry of 1 year unless fresh order of attachment is issued again. Now, friends, I have given you some glimpse of different case laws, not in detail, and they were for your reference so that you can use them in case need arises. And I have made proper explanation of this provisional attachment. If you have any query regarding this, you can drop your comment in the comment box below the video. I will be very happy to reply on this comment or your questions. Thank you very much.